Hi, I'm Georgia Williams with the Investing News Network, and we're here today with Colin Fisher, President and Portfolio Manager at StableView Asset Management. Good morning, Colin.
Good morning.
Thank you for joining us today.
My pleasure. Thanks for having me.
No problem. We were just at your panel, and you were talking about not being bearish or bullish looking into 2019. Can you explain why?
Well, as I was saying, one of the primary things that I look at is not necessarily the overall macro market, which I find is far more difficult to predict, but to focus on companies and the drivers in the industry or the client base that they're selling into and seeing how they're going to be doing.
Right.
So if you have companies that are helping companies either become more efficient or allowing them to sell more or to reduce costs in some ways, then what you'll find is regardless of the overall macroeconomics environment, that they will typically do well. So, I'm not investing in GM, so GM or, GE or whatever, they're very sensitive to the macro environment. The smaller technology companies, what you'll find is that they're very sensitive to the industry and the competitive behavior within that industry and what they're doing rather than the overall macroeconomics.
Now, with that being said, you did have top stock picks.
Sure.
And the first one was iLookAbout.
Yes.
Could you tell us a little bit about why you're looking to that?
Yeah, so a couple of reasons. First and foremost, you look at a business to invest in. First off, you're dealing with humans. So you have to look at board of directors, management, and the business model. And you can pick which one you want to look at first, but management is first and foremost, in my opinion. And so you have Gary Yeoman, who founded Altus Group. Altus Group is a $1 billion company, and then he was a founding investor in Real Matters, which is also a $1 billion company. So when you look at people who have a history of building companies, building wealth, and building wealth for shareholders, that's a very compelling argument. So if Wayne Gretzky and Mario Lemieux started up a small hockey team in a small market, you'd go, they're probably going to figure out how to make it good. They've done it before. So I think that's a critical element. The other thing is then from an industry perspective, they're doing in the real estate technology marketplace. So what you'll find is that is an industry that is really being disruptive right now, and they have a lot of the transformative technologies right now. So you have an industry that is in the process of changing, the regulations are changing, and so what they do is allow, currently one of their largest clients is MPAC, which is the Municipal Property Assessment Corporation. So they're the people who provide taxation for all the municipalities. Their technology does the workflow, but also allows you to understand what is the value of the house for the purposes of taxation. So they ensure that the municipalities aren't losing revenues by not taxing enough and not overtaxing and creating a liability.
Right.
So they are one of the preeminent technologies in that space. They're also buying a company now called Clarosity, another publicly traded company. They're buying the assets from that firm. What'll happen is post-acquisition, it'll be an incredibly compelling valuation. So enterprise value to revenue will be 0.5. If you take any of the comparables, they're trading at 5.1 enterprise value to revenue. So an incredibly compelling value proposition, plus they have a large growth component. So they'll be growing probably at somewhere between 20 to 40% per year. Plus they have an acquisition strategy as well. So I see that this is a company that's going to have long-term growth, great management, and a good business model that will help drive that growth.
That's exciting. Now, on the panel, they were talking about last year blockchain sort of being the dominant player in the room, and they're less this year, and marijuana companies are sort of the dominant power in the room. Now, we're moving forward, since legalization happened last year, into the new sort of areas of marijuana where they're going to be merging with other technologies. Are you excited about any innovations in that sector?
Well, there's marijuana and technology is a very interesting industry. Part of the reason is a lot of the technology that is required for marijuana is not unique. There's a ton of companies that do a lot of the technologies around point of sale systems, supply chain and management. You think about the pharmaceuticals, you think about wine companies or beer, a lot of these companies, these supply chain logistics, a lot of these things that are being built up in the marijuana space are there because there's regulatory risk. It's a gray area. Things aren't super clear. There's reputational risk. So what you'll see, I think you're going to see, is there's a whole bunch of companies that are building up right now that are actually light years behind a lot of other technology companies in other more mature industries, but they don't want the reputational risk or the issues, because at the federal level it's illegal down in the states, but at the state level it is legal. So that sort of morass of the regulatory framework makes it difficult for a lot of companies to want to move into that space. That said, I think what will happen is one or two of them will get acquired, but a lot of technology is not that advanced, in my opinion, in the space. There's some additional types of what I would call industry specific, the extractors and those type of, the extraction process and able to create products. That I think has some interest, but it could become commoditized quite quickly. So there's a concept of disruption and chaos. And disruption is much more, so that's like, Shaquille O'Neal playing basketball against 2-year-olds. That's disruption. Shaquille O'Neal playing against 40 other Shaquille O'Neals is chaotic. You don't know which Shaquille O'Neal is going to win in that basketball match. So I think in that space, what you have is a bit more chaos than you have disruption. And I think that any one of the legacy providers of those types of technology, once the regulatory morass goes away, will actually come in and take over. So I think some of them have very short shelf lives.
Now, forgive me, I may not say this quote correctly, but you had a really interesting quote about sort of short-term technology not living up to its expectations and long-term technology not being...
Right, so you're talking about O'Mara's Law.
Right.
So O'Mara's Law says that we, humans, society, overestimate the impact of technology in the short term and underestimate it in the long term. And so what that'll say is that's why you see blockchain last year. Everyone's like loving the idea of blockchain. And it will be a transformational and revolutionary technology, but there's a lot of other things that have to be true for that technology really to take root and to make a lot of those changes. So people are doing the overestimating in the short term. Everything's going to change overnight, whereas in reality there's a lot of other things that have to be true in the technological landscape for it to be able to show its long-term potential. So that's primary. I think the real quote, though, is the Mike Tyson quote.
That was a good quote as well.
Everybody has a plan until you get punched in the face.
I agree.
So, anyway.
So moving forward, you had a second top stock pick. Can you tell us a little bit about that?
Yeah, so Cutie Ads. Cutie Ads does programmatic advertising. And the simplest way I describe it is that when you're a buyer of ad space and you are selling a product, so you say, okay, I'm going to put X amount of dollars in and I get a return on investment of some sort. So if you think about it from like a brokerage account, if you put $1,000 into some algorithm and it gave you 1,020 back, you'd like, oh, that went pretty well. And if you put 2,000 in and maybe it gave you 2050 back, you're like, oh, this is getting better. This programmatic. So they have a machine learning algorithm, and what it's been doing is proving it to their clients that they are able to ever better fulfill the requirement of buying advertising and making the ROI good for their clients. So it's a bit like an algorithm that you put money in, you see a return on investment. That's as simply as I want to put it. And so what happened was there was a problem in the industry, right? So the industry caught a cold. Everybody had a big problem. They corrected, they pivoted. Their stock got hammered. And what happened is you saw in the Q4 of this year that they did $32 million worth of revenue with a 10% EBITDA, and that is unprecedented for this company. So now you have a cash flowing business that's got massive growth, and the market just hasn't quite figured that out. So that's a Cutie Ads, and I think they're crazy undervalued. So you have both, I think I look about crazy undervalued, great management, a Cutie Ads, crazy, undervalued, good management. So I think those are the two key elements.
Fabulous. And one tip for investors in 2019?
I don't know. I think it's the same for every year. Don't fall in love with your babies. You got to take money off the table. Don't get too invested in things emotionally, and that goes for pros too, right? So, and don't believe your own hot air.
Thank you very much for joining us today, Colin.